Cool. So this video might be the last in this specific course and things. And this will be on minimizing the decay factor. Um, so yeah, let's get into it. So I mentioned it in kind of my realistic expectations video of like how much should you expect to make in terms of EV and returns on your portfolio by trading? What's a weekly rate that's good? Um, Basically, the way I set it out was there's this idea of your system ran perfectly in a vacuum. Maybe what you get from back testing, or maybe what it would look like if your trade signals and your system was taken perfectly with no element of human error at all. So there's that, and then there's some decay factor, which is some decimal less than one that you multiply this ideal system function by, and that ends up being your returns that you get in real life. So if we have a better system and something that works better when ran perfectly, we'll get better returns. The other way that we can get higher returns is by minimizing the decay factor. So translating your system from the perfect ideal, what it would look like if it was ran perfectly by a robot, into real life. And what the closest approximation of that is we get by minimizing the decay factor. And we'll talk about some strategies for trying to do that. So the first one, whenever you're asleep, you probably miss signals the market gives you. So I would recommend like work a full-time job. Maybe you go in at 8 in the morning and you get home at 5 p.m. Go to the gym, make some dinner, and then just get on the charts and stay up all night. A lot of people like would not be able to stay up all night and trade all night without sleeping, which brings me to my next point. Um, there's a few magic pills out there that you can get from doctors, maybe psychiatrists, probably nurse practitioners in primary care. Adderall is a very good one. It's a great medicine, doesn't make you psychotic, it won't hurt your brain. So just take, as much of it as you want to. And, this will help you to trade more like a robot and not need to sleep. So obviously that's not how we do this and not going to be sustainable in the long run. So what are actual strategies we can use? The first idea, like trade a system that translates better to your life and fits your schedule. So maybe you can use range charts, but stick to a higher time frame. Something that you can set alerts for and get alerts on your phone, and it's not going to be super time sensitive. So maybe you get an alert and you're able to log in 10 minutes later and take a trade based on that. This could be that 128 range chart. Focus on setups that have higher EV. So, potentially, we go all the way down to the 16, maybe even the 8 range chart. There's just a lot of setups on a lot of trades that we could possibly take that would fit in line with our system. And some of these are just going to have, a higher theoretical return than other ones. So rather than, taking trades on the first stochastic setup, you could wait until a trade has a couple failed ones already, which means that we're probably getting closer to one playing out. It's kind of in the risk scaling video, I talked about how, the more fails you have that remain valid, like the higher EV and, the higher likelihood of the next signal working you have, which is just something that I found through backtesting and something that you should backtest and find for yourself as well. AO bar color changes. So maybe instead of taking stochastic trades that are in line with the trend, we wait until the AO. If we're looking for longs, wait until it flips negative, and then we get a bar color change. Maybe we've gotten a couple, two, three stock crosses by that point, and we just enter based on the awesome oscillator instead. Likewise, we could only trade stochastic divergences and AO divergences. Some combination of these, looking at these and weeding these down until we're getting like only the higher EV setups and the ones that are more likely to work out, and then just focusing on those. So we need less screen time and less chart time because we're looking for, just one specific thing and weeding out a lot of the noise otherwise. I'm taking only long setups is another idea that I think could help along kind of the same lines, like maximizing EV and minimizing decay. So we'll hop over to the chart. I'll kind of get into where this idea comes from. So the basic idea, if we get on the like a higher time frame candlestick or range chart and then zoom out, um, the market just kind of tends to trend whenever we look at it on a high enough time frame. Like if we go to weekly candles, this thing is like pretty much just trending up. And this has been since 97, 98. Obviously there are little bearish periods in here, but pretty much any time since that crash in '08, things have just been up, up only. So, based on this, if we were taking trades on the weekly, since 2008, we should have just been taking longs because that's pretty much just what our trend has been, and we haven't been under the moving averages, really for, any significant time periods. We can, get down some more, look at the daily. Based on the daily since October, we've pretty much been in this uptrend. So you could go on the 3 day or the daily. And if we're above the moving averages, just take longs. And probably long signals are going to be stronger because we're trading the ES, which is based on the S&P, which is an index and an investment vehicle, and it grows to mirror economic growth of the country. So, stocks just tend to go up over time. I think that if we had to choose between either only shorts or only longs, the choice would be obvious to do only longs. So then if we're looking at taking fewer trades that have higher expected value of returns, just take longs. I think that's totally valid, and something that, may help you to be profitable and may help you to get higher returns over time. There definitely are some shorts that you could take, based on this. We've got a stock div here that plays out, opportunities for a short in here, maybe if you were fast enough on the ball to take it. But even, in this time when those have been going on, there have been plenty of long opportunities. So could just be focusing on longs. The last idea I had here was, what about candlestick charts? Candlestick charts that are based on time have set intervals, so maybe easier to stay on top of. It's hard to be at your computer every time a range candle prints. So you may just miss signals and, not be present for them. If we looked at the daily candlestick chart, we know that a candle is going to print at the same time every day, which is 4 or 5 p.m. or whatever, depending on where you are. So set an alarm in your phone if you have trouble remembering and get to the chart 10 minutes early. See what it looks like the candle is doing, and we can just use the same trading system, but just base it on the candlestick chart. Well, obviously, you'll have to change some of the parameters a little bit because the set, risk reward might not work out because daily candles vary a lot in terms of amplitude. Like some candles are pretty high, like this one's $120 for points, and then this one was 10, this one was 15. So if we're hunting for longs based on the candlestick chart, we'll say that in this period here, obviously we've had an uptrend, we get a correction, we get the AO negative cross. Maybe we enter on the AO bar color change. So we would enter a long here on the close of this candle. Maybe we could put our stop kind of under the nearest local bottom, which we could choose to be this candle. Maybe look like 1 to 2 candles back, maybe 3, and just put a stop under the local bottom. You can target 3R like we do. You can see that you'd have to keep this open for a while, but we would eventually have gotten there. This would be August until November, so a few months. But this could be something that you're doing on top of what you already do. Um, Maybe you have this time frame in mind and you just zoom in. Maybe you go to the 4 hour. At the same time, when you expect to maybe be catching a long, you could hunt for something on the 4 hour. We see we have a stochastic divergence here. That would allow us to get in on this candle. And maybe we could put a hard stop here, and a soft stop if price just gets down and trades under this candle. Then we would just close the trade out manually. So we could get something tighter here. to either just target 3R or keep the target the same and shoot for a higher profit. We could enter this trade with higher risk because it's a swing and we're holding it for longer. But swinging based on the daily chart should be pretty tenable. You could also even look at crypto and other classes if you wanted to go this way. So you could take Bitcoin trades based on the daily chart. You can see we had, a huge push here with the inauguration. Stuff cooled off. We got the negative AO cross. Maybe a divergence between these two peaks. I think you could about call it that. It's not quite pretty because we did get a little bit of a cross, but maybe you wanted to enter on the bar color change here, based on thinking this is a divergence. So we enter, we put a stop maybe here. I think going all the way down this wick is too much, but maybe right there. We could see that we would have hit a 3R trade. This would have been like 10 days or something. So, a decent little swing. You could hunt for trades like this. You could look at a whole host of, crypto assets, as many as you wanted. And at the end of daily closes, just look through and see if there are any setups setting up. You could even just trade the 3-day chart. So maybe the same system, but with 3-day candlesticks instead. Which if you're doing that, I think crypto is a good asset class to trade. And spoiler, this is how I trade crypto when I'm not just holding spot. But gives another way that you can think about using a similar system to what we've been talking about, but in a way where you're able to translate it and, accurately trade this system, even working full time, because doing this on a 3-day chart, you just have to check candles once every 3 days, and that's all you have to pull up charts for. And you can print returns over time by doing this. So those were kind of my big ideas, and things that I think can be helpful in practice. For me personally, I do tend to stick to higher time frames, and I do tend to prioritize longs on ES. If I'm like getting down pretty small, like the 16 range, I might try and take some shorts based on divergences, but I'm usually happier to be able to get into long trades, and those tend to be what I look for, especially when we've had prolonged periods of upwards price action like we're in right now, which tends to be, where the market just hangs out. I'm gonna wrap stuff up for there. Uh, Wrap stuff up there for now.